About 2 weeks ago, I put out a video that looks like this. And about a week ago, I put out a video that looks like this. And basically, this is shaping up to be the perfect trade. And so what I'm going to do is tell you what I'm going to be doing this week to continue on the success of the last 2 weeks and show you how we're making a bunch of money on this trade and how maybe you can do it too. We always start by looking at the stock. Here is Tesla. Tesla is the stock we talk about. And we're writing covered calls or spreads on Tesla. Basically, we're doing a very simple strategy of buying the stock or buying the base position and selling the call against it, the covered call. And so here we have the Tesla hitting it, closing at 352.56, okay? And so you can see it took out that top that we had about, I don't know, almost 2 weeks ago when I started this video series here. And now we're up at the top of that and trying to break through. So I still think Tesla's on an uptrend, and that's what we're seeing right now. It's pretty exciting. Now, how can you take advantage of it? And by the way, anything can happen. It could go back down. But here's the way I hedge that so you can protect yourself. It's very important. Here is what we did. So just to go back and review what we did on the first video, the November 11th video, we bought 10 contracts of the February 240s. That's our base position. That means at that time, we didn't have to go out and spend $347,000 on that trade. We bought those at $11,675 per contract, and we sold call options against it, the 325, and they went out weekly. We got $6,000 on juice. Now, juice is the income, and juice is what I want you to focus on. A lot of people are watching videos these days, and they're like, "Oh yeah, but you know, you're making way more money if you let it go up." Yeah, but our job is to focus on the juice. Like, we're not trying to figure out if stocks are going to skyrocket. We're trying to just collect the juice on them and pick really good names with good juice on them, and Tesla is one of those names. And so the cumulative juice, that's this column here, I've got 6,000 shares, and now after taking out the $6,000, I've got $110,750 invested, okay? So pretty simple. Then the next week, the calls are worth zero because it's under 325. The strike price is under 325. So we're going to go out and sell the calls against. This week, though, we sold the 350s. We got $10,750 worth of juice, giving us, if you add those two juices together for the week, now we're at $16,750, okay? And so we got to see here what the value of the account is worth. I'll show you that in just a second. Now we've got the stock. It closed at 352. We're going to look at doing these 365s, right? I still think there's a lot of upside potential if we can get a breakout above, let's call it about 352. And if we get this 352 or 355 actually, I think we go to 365 fairly conservatively. But you know, I'm happy to get $610 per contract. That's $6,100 for the week, right? So we went out, we sold these contracts. I think it was about $6 by the time I did it, but it shows here 610. Let's call it 610 because that's what you see on your screen. And so I'm adding that to what I've made. The calls were 256 in the money. That gets factored into the account value, which I'll show you in just a second. The call options that we sold are the 365, so we got 6,100. Now our cumulative juice is $22,850. That's pretty good for only investing about $116,750, isn't it? Oh, and by the way, I get to the $142,000 by taking the existing value of my base position, which I kind of forget about because once I'm in the stock, I'm in the stock. But the value of the base position now is $120,000, right? So it's gone up as well. So here we are at $142,000, and it's only really been a couple of weeks. And so that's a pretty good trade. So now you can see the break-even point is $93,900, which basically means the stock really has to go down a lot for you to start threatening, you know, the gains in the account, right? So you're lowering your break-even point. That's what calls allow you to do. Everybody focuses on how much money you're going to make in the market. The bottom line is if you focus on how much money you can keep, how much you can protect your account while getting some juice, the juice is the amount that brings down your break-even point. Okay? I hope that makes sense. Every week we're going to get 6,000 or 10,000 or whatever the number is for the week, and that's income. That's the money we always get. And so as long as we always get that, the stock doesn't tank, we're going to make some money, right? And right now Tesla has been going up nicely. It's been kind of, when we started this, I think the stock was around 347. It's only 352, but look at all the money we've made in the last couple of weeks because we're smart. We're selling the juice, okay? What could go wrong? Well, it's the stock market. Anything could go wrong. Number one, the stock market could drop. We could have a nuclear bomb go off somewhere, right? We could go to World War III. We could have a president die. You know, all these big things could happen, and they're usually black swans, and they don't always happen. We can't bet on those things. The stock could drop, right? Or both of those could happen at the same time. The bottom line is you've got to make your trade adjustments when you can, and you got to play defense. So you got to learn how to make trade adjustments when things are going against you. And that means you've got to have a plan. I say it almost every video. You've got to have a trading plan that you write down before you get into the trade so that you know how to handle things when they go wrong, because your emotions are going to get the best of you and you're going to make really crappy decisions, right? So trade your plan. And then you could also go to cash, right? That's the other thing is like, you know what? The market's going down. I want to preserve my capital. Things not looking good. I'm going to go to cash. You'd rather be out of the market wanting to be in than in the market wishing you were out, right? Now, what could go right? Well, the market could go up, or the stock could go up, or both. Well, that's great. Don't be one of these people who writes me like, oh my God, I'm losing money over the strike price. You're not. You're making the maximum amount that you designed on the trade when you entered it, right? And so we want our stock to go over our strike price. We don't want it to go down. We don't hope our stock doesn't get taken away from us. None of these things that you probably think because you've been programmed by somebody else has been telling you how to make money in covered calls. I'm telling you, I've been doing this for a lot of time, decades now, and you want your stock to go higher. You wish for it. You hope. That's the best thing. If it goes higher, that's cool. Your base position's going up. You're not going to get taken away because you're going to roll at the end of the week like I've been showing you. One week it was under the strike price. This past week it was over the strike price. We still have the stock. We still have the base position. So we're not getting taken away because we're rolling it to next week's call at, the $365 call. Now, we want it to go to $365 because we get another $13 of appreciation in the base position. That's how great this trade is if it goes up. We don't not want that. Don't be one of those crazy people that writes me that comment. We can do this trade over and over again. You're starting to see a pattern, right? Every Friday, I roll the trade to the next week. Every Friday, I roll the trade to the next week. And I keep collecting the juice. Sure, it could go down. I know that, right? This is a stock market. This is not a perfect system, but it's the best system I've ever seen. We focus on collecting the juice. We're not in this for the home run. We're not in this for holding on to our stock for as long as we can. We're in this for the juice. And if you're watching my videos, I hope you're getting that. Now, it goes over your strike price. Sure, you're going to have to use a little bit of working capital to buy the dollar for dollar amount that's in the money over the strike price. So what? Your base position went up. Our base position is going higher. Our delta is going higher on our base position. We want all these things to happen. So this is shaping up to be a perfect trade, and I hope you're starting to see the power of writing covered calls and using a predefined strategy that you have on your trading plan. I'll see you on the next video. Take care.
Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.